Joining me now for his first interview with MSNBC since being confirmed as chair of the Council of Economic Advisors, Jared Bernstein. Good to see you. Thanks for being on with us.
I'm so glad to be here with you today, Katie.
Let's talk about the future. Let's try to predict it, or tell me what you know. We keep hearing about a looming recession. It's coming, it's coming, it's coming. We've been talking about this, it feels like, for a year. Is it coming?
Well, I think if you look at current conditions, they're pretty solid. And I start from the perspective of the American consumer, because that's just about 70% of GDP. That takes me right to the job market. When you have a job market where unemployment's been below 4% for about a year and a half, and we're actually seeing not just nominal wage gains, but real wage gains, that is, wage gains beating inflation, that's obviously a good thing for households. It's a good thing for kitchen table issues. Pushes back on some of the inflation you were just talking about. Not all of it. We've got more work to do. We know that. But that also helps to keep the kind of flywheel of consumer spending going, more labor demand, a virtuous cycle. I just heard Chair Powell in his press conference talk about a path to a soft landing. So that's something that I think we should all pay attention to.
You say we got more work to do. What does that work look like?
Well, I think implementing the president's agenda, which is very sensitive to these aspects of the economy, particularly when it comes to inflation reduction, lower cost for prescription drugs, lower cost for insulin, much more domestic production, meaning improvements in supply. You know, for a while there, we had a real spike in goods prices because there was so much demand, but also supply was so crimped post-pandemic. Supply chains are largely back to where they were pre-pandemic, and that helps put downward pressure on that part of inflation. As we implement both the Infrastructure Act and the Inflation Reduction Act, that will also, over the longer term, contribute to the economy's supply side.
You're talking about supply chains. I have to ask you about what's going on the I-95 and the overpass collapse. So much of our GDP crosses down that corridor. What is it going to, what's the expectation of what that collapse will do to the economy and to the supply chain? What are you preparing for?
Well, first of all, this has been an area of that we've really focused on over the past few days, and there are others here who've been to the site. The president's been kept up to the minute on the briefing there. We don't have a quantitative estimate yet of the economic impact, though it's certainly something we're going to look into. I think the broader point here is that when this president came into the White House, he wanted to make infrastructure, not just a catch line, but something that we really did something about. Now, this tragic event obviously came too late for that. We've got to make sure that these investments are flowing into the system with as much speed and efficiency as we can to avoid situations like this in the future.
What's your expectation for inflation as we go forward? Do you expect that, and I know you're not involved with the Fed, but do you expect that the Fed will start raising rates again?
I'm not going to get into granular comments on Federal Reserve policy regarding interest rates. I think the figure you showed earlier shows a very consistent trend in CPI growing more slowly. So, it's down by more than half from where it peaked a year ago. By the way, the producer price index came out this morning. That's actually been negative 3 out of the past 4 months. And the reason I raise that, it's kind of arcane and in the weeds. But at a time like this, it means that input prices, intermediate prices, the prices that go into production versus consumer spending have been easing. So that probably would continue to put some downward pressure on prices and continue that favorable trend you showed. One other point on housing, we do think that one area where Federal Reserve interest rate hikes really shows up quite quickly is in dampening demand in the housing sector. And there we expect in the second half of this year, housing prices to start ease as well. They get a pretty hefty weight in the price index, so that should also help the trend.
The consumer price index is the CPI, for anybody who might be curious. Talk to me, or talk to somebody who's walking into a grocery store right now and they see that eggs are down, but they're still more expensive than they were a year ago. What should they expect going forward? And should they expect any direct relief from the government in terms of their grocery bills, which are really just painful for anybody who does shopping for themselves or for, God forbid, a family of four?
Well, let me answer that in two ways. First of all, yes, we're going to, as I mentioned, continue our campaign to help ease prices for kitchen table commodities like the ones you've just mentioned. I mean, the price of eggs went way up, but has actually come down back to around where it was a year ago. But where it was a year ago was still a bit elevated. So we'd like to see more progress there. By the way, that was very much a function of avian flu, which has largely come out of that system. So that kind of one-time idiosyncratic problem seems to be at least somewhat resolved. I think there's another point here that we need to start talking about. You know, when I come back, we can get deeper into this, but let me raise it here. One of the key answers to your question that may seem tangential but isn't is real wage gains. That is what's most important to consumers. Yes, of course, we'd love to see prices coming down, and I mean that as separate and apart from slower inflation. But more realistically, over time, what we really want to see is wages beat inflation. If real wages are growing, it means that the consumer can buy, that her paycheck goes further relative to prices. So for the first time in yesterday's CPI inflation report, for the first time in a long time, year over year, wages grew in real terms by 0.2%, so not a ton. But when nominal wage growth is beating inflation, that's another very important way to provide relief to working households.